Best way to describe myself is what asset is going to make me money in the next 6 to 12 months. That's all I care about. I don't care if it gets too high, I'll sell it in a heartbeat. I never fall in love with any asset because it's not going to fall in love back with me. That's for sure.
I love that.
Right. And I do think eventually Bitcoin takes that on. But again, most of the Bitcoin maxis, they fell in love with the asset too early on. And again,
Yep.
Bitcoin was created in 2009. So you have to understand it's only a 13-year-old or 14-year-old, right? It's not a mature asset yet. So it's
Correct.
still behaving very volatilely. But I do think it matures into that eventually. I think there's a lot of things that are playing into it, but I think you can look at what happened with Russia in terms of their invasion and how the SWIFT system was used in many ways as a weapon. I think the Chinese are very aware that the dollar is the reserve currency of the world. The Chinese are being careful and understanding that eventually the dollar may not be that reserve currency. And I think every central bank understands that they've been printing money recklessly, and these guys, they do it because I think there's a short-term benefit, meaning politically, and they have to, people are hurting, so they want to get people out of poverty and so forth. But the bottom line is they understand, and I think almost any person that's educated in this understands the long-term outcome of printing money. I mean, look at countries like Venezuela or some African countries or anywhere else, that this isn't a good thing long term. It's unsustainable. So by buying gold, you're buying a physical asset that does for thousands of years retain its value. And I think that's their way of shoring up their own balance sheets in many ways. I'm not anticipating it. So I do know I've heard that same thing where, people are saying, oh, get ready for oil to rip back over $100 and all these things as China reopens. I'm not sold on that. The charts are definitely telling me that we're headed lower in oil. And I think it makes a lot of sense if you think about what's going on in China. So, the narrative got switched away from, oh my goodness, there's a housing collapse and crisis in China, to COVID zero policy being undone, and this is going to save the day. But you have so many economic issues in China as well that I still think it won't have the impact on oil. And I also think that if you look at the rest of the world, like let's say, and I heard the IMF came out this weekend and said that I think a third of the world will be in recession in 2023. So you have to say to yourself, okay, if a third of the world is in recession in 2023, what's the reduction in demand from that one third? And does that then offset the China reopening anyways? And that's the way I would lean. So I don't think there's a ton of downside in 2023 in oil, but I could see us at $65 a barrel at some point, and maybe it just hovers around there over the next year or so. From what I read in the article from the IMF, or the statement from the IMF, they were talking about, advanced economies. So you're talking
Yeah.
about, including Europe and the UK and Asia and the main Asian countries and so forth. So they're not talking about, some little tiny country in the middle of the ocean. They're talking about major economies that be one third would be in recession. And again, I think the US is in that group. To me, it's such an interesting thing because you have the global recession that could impact these economies. But at the same time, I'm looking at a lot of charts. And like, for instance, the Chinese chart is extremely intriguing to me, the Chinese stock market. Same thing with the EWZ, which is the Brazilian market. And I think one of the keys to understand is that money has to go somewhere. So we talked about, well, if earnings are dropping on US companies, then those valuations are going to go down. Then where do asset managers put money to work? And they're going to look for the least amount of negativity. And I think that's where you come into this scenario where you look at China, you look at some of the South American countries out there. And one of the things here to look at, and I got to show this chart because it's just such a cool chart to look at, is that if you look at the EWZ, which is the Brazilian stock market chart, this is the ETF that tracks it. Look at this. So this was back in '08. That was your high. So we just talked earlier, and bring this full circle with you, Jay, is that we talked about how the stock market itself in the US, it could be 10 to 15 years before we reach a new all-time high. Well, take a look at what Brazil's done. Brazil hit a high in '08. It hasn't even come close to breaking out and going back and making new all-time highs. And now we are at 15 years in 2023. And so my thought process is, during COVID, because of the Fed, people were overinvested in the US. There's going to be a rotation to kind of the least bad in the group. And I think you will see some growth positives out of stock, out of ETFs that track Brazil and China. And I think these are the ones to play. I mean, you look for something that's already been beaten down, and that may be the move to the upside that actually wins the day. And the beautiful thing about it too is that, and this is something in bear markets give you so many opportunities, not just, whether or not these are opportunities, but like when you get a bear market, there's periods of massive panic where things get smoked, and
Yeah.
and good investors can kind of understand the technical levels on the chart. When something's declined X% in a very short amount of time, you can get short-term relief rallies, and bear markets are known for their relief rallies. So like you can look, like for instance, Apple's getting crushed these days. There will be a point where Apple gets a snapback bounce. And again, it's a little bit more on the trading side of things that I do, but there's
Yeah.
like always good opportunities. You just have to be patient and find the levels. In my portfolio, what I'm really looking to do here is pick up some of these like EWZs on China. China has ripped recently, so there's no way I'm going back into that in the near term. But when it does pull back, I will be a buyer of pullbacks there. And then also gold miners, I think do very, very well in 2023. So those are some other areas. And then there will be a point where I do think, things with exposure to cryptocurrencies start to become better. Coinbase has been absolutely trounced. It's actually starting to look semi-interesting down here, even though I don't think Bitcoin's quite bottomed. But there are some things where you can, for me, I start nibbling, right? I'm a nibbler. I don't go all in at one time. I kind of dollar cost average slowly on very, very good levels. I think you're right on that. Listen, no one likes to admit they've made an error, but anytime you have your money and you're making a decision to buy or sell a stock or a crypto, the onus is on that individual. When I screw up, and I have plenty of screw ups trading, right? It's not like I'm not going to be like, oh, my cat walked across my screen and messed me up. It's like, dude, I made that physical choice to click the button, and I got to live by it. So I think that's true, but in knowing how the world works, that's somewhat of the harder thing to come by. There are some investors that actually own up, absolutely, but there are others that it's much easier to blame someone else, right? Other things too, Jay, is like there's nothing wrong with taking a risk. I was talking in a few recent interviews about like Solana. Solana was trading at $8, and I got on interviews and I was like, listen, Solana, it could go to zero. But if it survives this fear from FTX and what they're going to unload, it could also go back to 50. So, if you're going to buy Solana, number one, you do with a very small amount of money. And number two, you have to go in saying, listen, my down case is an $8 or $9 loss, but my upside is $50 or $100. And you have to be okay getting into those trades. So I think, it's all about risk reward analysis. Twitter's awesome, folks, at Gareth Soloway, basically at my first last name. And then if you're interested in crypto trading, I do it at verifiedinvestingcrypto.com, and inthemoneystocks.com is where I do stock trading. So come check me out. And Jay, it's always a pleasure, man. We always have great discussions.